Hey everyone, Alan Ward here from Slow Fortune, and today the Reserve Bank in Australia announced a 0.25% rate cut in the mortgage rate, or in the cash rate, which is expected to flow through to the mortgage rate. Now, typically, a lot of banks don't pass on the full 0.25. I think ANZ came out today, and I think they're doing 0.18 of it. But let's just assume that your bank has passed on the 0.25 interest rate cut, and I just want to show you how you can pay your home loan off sooner as a result of this rate cut. I'm on the MoneySmart website and I've gone to the mortgage calculator, which there's a few elements to this calculator. The first bit here is all about how much my mortgage payments be. Let's assume you've got a loan of $400,000, and let's assume that you took the loan out today. So it's at a 3.25% interest rate. And based on this, the monthly repayments are $1,949 per month. But we know that today the interest rates are about to drop by, let's say, 0.25%. So your loan rate will be 3%, not 3.25%. Let me show you what to do. And you can figure out this in your own loan as well. If you go down here to how can I repay my home loan sooner, and click on that, and it's asking you for your current mortgage. So let's say it's $400,000. Our repayment was $1,949 per month, and our interest rate was 3.25. And I just blank out the fees section just so you know as well. Now, funnily enough, there's a slight discrepancy between those two calculators, and it tells me it's going to take me 25 years and 1 month to repay the loan. I figured out if I just increase 1949 to 1950, it comes back to 25 years, and that makes the maths a little bit simpler. So this is your current mortgage. $400,000, you're paying $1,950 per month, interest rate of 3.25, and you would have it paid off in 25 years, and you would pay in total $584,660. Let's look at the alternative. Now, the alternative interest rate, let's say it's 3%, because interest rates have dropped to 3%. But here's the thing, you keep paying $1,950 per month. So it's a really simple hack, because in reality what's going to happen is that with this interest rate cut, your bank will reduce your home loan repayment down to whatever will get the loan repaid off over 25 years at 3%. And I did the sums, it's about $1,890 something. So it's about a $50 drop, just over a $50 drop a month. So remember, the bank wants to lend you money for as long as you can repay it, because it makes money off the interest that you pay on the loan. So it's in the bank's interest for you to take as long as possible to pay off the mortgage. It's in your best interest to get the mortgage paid off as soon as possible. So this alternate, let's look at those two numbers. It says you'll get the loan repaid in 24 years and 1 month. So it doesn't sound like much when you look at it like that. I mean, 24 years, 1 month compared to 25 years, it's an 11-month difference. But when you look at the amount of money there, it does make a difference. See, the difference between the $584,660, which is what you would repay in total on the current scenario, and the $561,617, which is what you would repay if you kept your same repayments, but it's at 3% instead of 3.25%, that difference is $22,944. So 11 months doesn't sound like much, but $22,944, let's just round it up and call it $23,000. That actually does sound like a lot, and I'd much prefer that to be in my pocket than in the profits of the bank. So this is one really simple strategy that you can use. Whenever there's a rate cut, don't drop your repayments. What you do is you contact the bank and say that you'd like to keep repaying your loan at the current repayment level. Some of you may have your own direct debit set up or direct credit set up, so you're the one that's in control of how much it is, so you may not need to change anything. The point is this, even though it would be tempting to reduce your repayments, you don't need to. It will lead to you paying more in interest over the course of the loan. It's in your best interest to keep your loan repayments at the current level they are. It also builds up a bit of a buffer in your loan as well if you've got a redraw facility. So if something does happen down the track and you need to get your hands on some money, you would have a bit of a buffer of money there that you could draw on. So there you go, a really, really simple hack of how to profit from the 0.25 rate cut announced today in June 2019 by the Reserve Bank. And it's a really simple way to save money off your mortgage and get it repaid quicker. Thanks for watching. Would love a like and a subscribe if you haven't already. Thank you.